First trade of the week overall was EURUSD at 1.71100. Price at other plans as we punctured through 30 pips out of our favor before absolutely collapsing, finishing up this downtrend overall. So now this trade has gone about 84 pips in profit, and the rest is history. What we were trying to do was capture the ending point of this retracement. Price pulled back a little bit deeper before overall the downtrend continuing in our favor completely. So it was a very slow moving trade, very slow retracements and retests of key zones, like right over here at 1.16800 and also down here over at 1.16700 before price absolutely collapsing. So A+ trade in my book, and our area of confluence was made right over here at the ending point of this deeper retracement. Next up, specifically at 10:15 a.m., we got that key retest right here. This was actually a optimal entry point if you wanted to re-enter at key zones. This area right here. So even though we're in this trending environment, there is consistent lower highs getting printed on the charts at key zones. Even all these key retests in the market that could have been capitalized off of as you're flowing with the trend. The best trades are the ones that slowly build your wealth. Because, when we talk trading, I've noticed this too. Everybody gravitates towards the faster markets because we're instantly gratified human beings here. Think about the world we live in. Everything's at the palm of our hands. Uber Eats, fast food, everything that we could possibly want, Amazon Prime delivery, it all comes to us right here, right now. But some of the best trades, like trading, will expose that because these things take time to develop. And some of these trades, it's going to take the utmost patience to hold. Some phenomenal trade opportunity on this one. If you had the resilience to hold this through, you would have reaped the rewards of this trade, because this trade did take some patience, it did take some resilience. To be able to experience the profits from this, you need to be able to endure this piece right here. Your biggest enemy in this game is going to be you, and you only. And this is where that you part comes in. Do you have the resilience to get through this in order to experience the downtrending action? This is where patience comes in. This is where trust comes in. Trusting in your system. Because if you can't get through this, that means one thing and one thing only. You're not trusting your own process. You're deviating away from your system. Following your system thoroughly is knowing, all right, I have my preset 40 pip stop loss. I'm going to still hold this through in order to flow with the downtrend and actually experience the profits. So keep that in mind too. To close this out early, even when we're up top here, shows a distrust in your trading system, even when you're experiencing drawdown, because it's still going to happen. Happen on GBPJPY, even up here. On the first position actually for about 16-17 pips. Second entry, there was zero drawdown on there too. The point I'm trying to address is these trades, they take time to develop. There's going to be times where these things happen. You're not always going to get a pitch perfect entry point as much as I'd like it to happen, As you can see, both these trades were already finished, but talking about over here, another retracement that happened. The overall idea, because we are in this consolidation right now, the idea was for the downtrend and this consolidation to break before we can collapse in price. So we got two entries over at the keyhole psychological level at 211 flat, and first trade was right here. That went for exactly 48 pips. And we retested the bottom end of this consolidation right here. As you can see, we had a zone right here. On Thursday, we got in one more time. And we went zone to zone on this one for about 44 pips. Set our stop loss to risk-free, and this is a good example on why we do that. Because, first one, we took partial profits all the way down here. Price came back, hit our trailing stop loss, but it was a risk-free trade. Next, we had GBPJPY also at 211 flat, and that trade also was risk-free as well. Next up on EURAUD, we had a market structure shift over here. First one, right over here, filling this imbalance and price shooting up, and we saw market structure shift from a downtrend to an overall uptrend. So what happened was the first initial part of this shift occurred right over here when we had an imbalance, and the first higher low was printed on the charts. Imbalance was filled, price shot up. You could have got in at 1.73550, that key quarter point, and then price completely shot up. Retested a key zone along with newly established higher lows getting printed on the charts. This position was actually framed over at the 1.74 whole level too. Downtrend to uptrend shift overall. And it's all capitalizing in key areas. Key areas being like right down here and framing it around 1.74 flat. GBPJPY having other plans as the bottom end of this consolidation, and some minor zones were consistently being retested. Now with 212 getting rejected and retested. The overall idea going into next week is going to be, of course, now we could see 212, 500, 213 potentially seen. So yeah, market structure shift on Euro AUD, GBPJPY. We had our two positions here. Trade management was key with these two, most definitely, because as you can see, for the first trade position, partial profits down here, risk-free trade when it came back to entry point. Zone to zone, when you're 30-35 pips in profit on these, you want your stop loss right back here in front of the entry point with partial profits being taken when we hit minor and major zones. So you can at least grow your account when we're going from one zone to the next. That's all that needs to be said there. You know, the best trade of the week was the one that went completely under the radar, because if you just held out EURUSD for the entire duration of the trading week, it would have been very, very lucrative. If you only spent your sole attention on this one, yeah, it was slow, but as you can see, slowly but surely, it made its move all the way back to the downside. All the way up top here, on Monday, we took this trade 89 pips in profit. This is considered a swing trade in this sense because it did take the entire trading week for this to fully develop. Patience is going to be needed for some of these trades. Let this be a testament to that. There's going to be trades where you're going to see profits in your first 5 minutes, your first 15 minutes, your first day holding the trade, and sometimes it's going to take 5 whole trading days to, let the analysis fully develop. Every trade's different. Every single trade is different. And a lot of these trades, it's going to require the utmost patience to fully hold. That's going to be the hardest part, arguably, in your trading journey, is developing the patience to hold these trades, to overcome boredom, to decrease your willingness to be in the market. You don't always need to be in the action, and just to focus on 1 or 2 assets that have a great analysis and hold it through. You don't need to be in the action every day. You don't need to catch every single move. All you need is a couple A+ opportunities and hold them through. That's what it takes. Everybody wants to always be in the market. It gets your blood boiling. I get it. I have 9 years of experience. Do you think that stuff didn't happen to me thousands and thousands of times before? Of course. But now in this day and age, less is more. Quality over quantity. All you need is just a couple A+ trades. That's it. We had 1, 2, 3, 4, 5 for the entire trading week.